So for the past 3 years, we've been investing as a syndicate. So a syndicate is just a stage or a phase between an individual angel investor and the full-fledged fund manager of building a VC firm. We were investing on a startup by startup basis. So we've done 18 investments in the past 3 years, focusing on Africa. The idea of the syndicate was to build a network of micro retail investors that are interested in the region, but either they don't have the experience, they don't have the time to pick exactly what they want to invest in and so on. So I built this network, and by the end of last year, probably we're sitting at 800 to 1,000 members that joined the syndicate, and they were all global.
Sherif, why do you do what you do?
I think the development of Africa and the future of Africa is with small businesses and startups. So, and I always loved technology. So I thought, yeah, I want to remain in technology, but start doing something from the investment side. So helping startups and getting to know different kind of businesses is something I love doing, and I think it will have the impact on the continent in terms of the development, like creating job opportunities and everything. I think SMEs and the startups are actually what carries the economy of the continent.
Before we get into your capital firm, if I had to ask you, what is a contrarian truth that you believe to be true that not many people agree with you on, what would that be?
A contrarian truth? The way people sees VCs, they don't understand exactly that they are at the end money managers. So we have a job to do, and obligation in front our investors. With in a sense, we work to get them the best returns. So a lot of people, when they think of the VCs, they think that we're just throwing bets here and there, while we try to build and help and select businesses that we think can actually do the right returns for the investors and the LPs in our funds.
And could you walk us through how you started Jedar Capital?
I worked all my life in technology, as I said, and then this happened gradually. So 10 years ago, I started working with startups, just helping them. I wasn't part of an organization, but I was helping friends and friends of friends, whether with the pitch deck, their financial model and sheets and so on. So this was the entry point for me, or maybe the start of getting involved with startups and loving this word. And then I started to do a couple of very small angel investments, but it helped me like feel, yeah, now I have a skin in the game. I believe in the startup. I help them. I invested in them. So it made me like curious as well about understanding how investing in startups work. I think the real transition happened 2015 when I became an LP in a fund. So I invested in a fund in Egypt in 2015, and I spent 5 years learning about VC. I wasn't like of course a part of the fund. I was just an investor in the fund, but I always tried to work and maybe help in the deal flow, sending them opportunities and understanding how they do the investments and so on. So I think this 5 years that I learned a lot about VC helped me as well to come to a realization that this is really what I like to be doing, maybe the next 10, 15 or 20 years. At that time, I was still in Egypt, working, of course, in the telecom and technology sector. But I decided, yeah, that's what I wanted to do. I left my job at the telecom and technology world and then moved to the States. And this is when I started Jedar Capital.
Okay.
Yeah.
And back to when you became an LP in that fund, what courses did you do, or what upskilling did you have to do to get yourself into the VC world, or was it just learning through experience?
Actually, both. So I learned a lot during the 5 years when I was in Egypt, since I started as an LP in the fund, an investor in the fund. But when I moved to the US, I wanted to do some formal training as well. So I joined a couple of programs in San Francisco. It was online because it was 2020 during COVID. And it helped me a lot because I wanted to learn as well from, again, VC is invented in US. So I learned a lot. I joined a program there called Going VC, which helps people who want to tap into the VC world, whether entry level or they want to upscale themselves and maybe get up the different VC, I would say, stack. So this helped me both as well connect to the community there, a lot of VCs, a lot of people working around VCs, and we started to get and build this community, which was for me was very important because I wanted to build this network of VCs. Essentially, I was moving from technology and telecom into the VCs, so I'm still was building the network around these sectors and these firms and so on.
And your Jedar Capital fund, how did you get investment into that? And are your investors from America or in Egypt?
So for the past 3 years, we've been investing as a syndicate. So a syndicate is just, for me, was like a model. I would say it's a stage or a phase between an individual angel investor and the full-fledged fund manager of building a VC firm. So I ran this. We were investing on a startup by startup basis. So we're doing SPVs for every startup. You can look at the SPV as if it is a mini fund, just raising money for this specific startup. So we've done 18 investments the past 3 years, focusing on Africa and Middle East and Southeast Asia. So we've done, but the majority of our focus was in Africa. So out of the 18 companies, we invested in 14 in Africa, 4 in Pakistan and Bangladesh. And the idea of the syndicate was to build a network of micro retail investors that are interested in the region, but either they don't have the experience, they don't have the time to look at a number of startups every month to pick exactly what they want to invest in and so on. So I built this network, and we actually, by the end of last year, we're sitting at 800 to 1,000 members that joined the syndicate. And they were all global. So we had people from Australia, Singapore, Hong Kong, all the way, through Europe, Middle East, and Africa till Canada and US. And again, as I said, these are people who want to write small check sizes, but they want to pick the startups that are interested in.
What's the minimum check for these syndicate investors?
Yeah, we were doing $5,000 per investor, so they can come in, put a 5K in a specific startup for their choice. They choose it actually. We do all the work, the due diligence and everything. We bring the opportunity to the network. We even arrange like a webinar where the founders present to the network, like, it's a pitch plus a Q&A session and so on. And then they decide, they either pass or contribute. So a deal by deal basis.
And your business model, is that commission based?
It's all in the future return. So whenever we do an exit, we are compensated with, it's typical to a VC fund, with the exception that we do not charge management fees yearly. It's a 0% management fees. We only charge the carry. So once our upside probably is when we do an exit, that's where I do money. I make money.
And your portfolio companies, which industries do you specialize in, and what do you look for in these portfolio companies?
So for the syndicate, we weren't that much focused on a specific sector. I wanted to get exposure to many industries. Number one, I wanted to understand different industries, and I wanted as well to discover where I'm able to add value more. So for me, it was like exploring different sectors as well. So we've done through the syndicate, fintech, marketplaces, e-commerce, health tech, biotech. Now that we are raising our first fund, it's a thematic, so we have a specific mandate around digital trade enabling platforms and financial services, mainly B2B financial services. So our focus is on startups that are building platforms around how we move goods, how we move money, how we move people, whether in a single country or cross-border, especially with the, I would say, the activation of the African Continental Free Trade Agreement. We believe that there would be like a lot of trade happening cross-border, and this will entail that, yeah, definitely we need to see platforms in logistics, supply chain, and shipments and so on. Also, trade finance is key to enable these small and medium importers and exporters and so on. So that's our focus for the fund. So we stopped being like looking at emerging markets at large. Now we're a pan-African fund focusing on specific sector.
And what do you look for in founders?
We are an early stage, so we do pre-seed and seed. So it's very, very important to look at the founders. So we definitely try to understand their personality very well. We need to look for people who are really resilient. They understand what they're doing. They are domain experts in what they're trying to build. So we would love to see somebody moving from, let's say, working in a corporate in the supply chain and logistics and building a startup in the logistics and supply chain. We believe that it is important to build a company after working for a few years in this domain. It adds a lot, of course, of understanding and depth to both the network as well as the product itself that the founder or the entrepreneur is building. So that's key for us. And usually you spend, I think, the first call with or meeting with the founder without looking at the deck. We just speak to them. We need to understand them. We get to know more about them as human beings, as a person, before building the product. So usually first call is that just conversation. Then we proceed to the deck and the pitch deck, the second actually call.
And is there a framework on what you look for in that founders? Like, is there belief and value system that your questions are tailored around for that founder?
I think we get this from the conversation. When you spend like 1 hour speaking with the founder in really a two-way conversational human thing, you get to build your, I would say, conviction on the person that, yeah, you feel, because again, this is a long-term relationship. We will be like partners for years, at least 5 years, up to maybe 10, in some cases more. So it's very important, I think, yeah. And we get this after, a couple of calls with them. If we feel that, yeah, there is this founder-investor fit, we proceed to dig deeper, understand the product, and so on.
And what are some mistakes that you've noticed that founders make when they're either asking for money,
Yeah.
and even if you've invested in them or you've seen other investors investing in these founders, like what are some common mistakes that you've picked up in your time?
I think for the founders raising, sometimes there is more than they need early on. It's very important. I know that sometimes, yeah, there are issues, especially last year, people who have raised like enough or more than they needed were lucky because there was some scarcity in capital. But in general, it's very important because it's very, very expensive for them in the beginning. So valuation when you're starting a company, it's still low. So you wouldn't want to raise more than you need before achieving any milestones where the valuation is very low and you're giving away like a big percentage of the equity. So I always encourage them, if they need like a specific amount to achieve many milestones, split it. Do a small round with, I would say, a faster milestones, maybe 6 months to 12 months. Achieve this successfully and then go to the second round. Probably with the initial traction, you will be able to raise the other tranche or the second part of the amount of funding with a better, definitely, terms and maybe less dilution than you would go from the very beginning in the scratch. Something I learned as well from my side as well, or I wouldn't say mistakes, but it's a general notice, is it's very, very important to invest in founders that are very close to their markets. So I've invested in a couple of companies where the founders actually were not in the country. They were building from whether Europe or US, building for Africa. They are originally from Africa, but living abroad. And the team is in the local country in Africa. But I think it's very important to have the whole team in the country, at least I would say the management team in the country, very close to the customer, very close to the problem, very close to the market. It's very important.
And in terms of your portfolio companies, the pre-seed companies that you've invested in, what sort of support do you provide for them apart from the capital?
Yeah. Again, being like or coming from an operational background, we try to help them with some sort of business development and connections. So, for example, my work is related to telco. So, if they need support with mobile carriers, for example, for specific partnerships, we also did some mobile financial services as well. So, we're connected to few financial regulators across Africa as well. So we help them on the operational partnership, strategic partners, as well as connecting them to or trying to bridge the gap between them and investors in the US. So my presence there in US has helped me build a network of investors, and many of these investors, when I start like developing the relation, some of them are trying to be active in Africa or considering to come into Africa. So we build these connections as well, and we help them with finding capital and finding the right investors in US.
And how are you convincing those US investors to be part of your fund to invest in Africa?
Yeah, it is hard. It has been very, very hard. I think the first year when I was running the syndicate, it was mainly the conversation was mainly centered around education. So I wasn't speaking to them about the startups at all. I was just educating them about Africa and the reality of Africa and trying to, bring the right narrative and correct the misconceptions that they have around Africa. So it took some time, but a lot of these actually conversation have led to some investors coming into the syndicate, and later on as well, some investors and even GPs in some funds coming into the fund as LPs.
In terms of ecosystems like Africa Arena, how important have they been in your journey? Have they helped, and how have they helped?
Yeah, I think these networks and communities and events is very important because I think the whole thing about investing in Africa, it's really collaborative. We need to connect to different stages and like accelerators and incubators, angel investors, later stage investors, as well as pre-seed and seed investors, same as Jedar Capital. So it's very important to spend some time because again, at the end, it's a whole value chain, and for the continent and the startups ecosystem to thrive, we need to make sure that the whole value chain is actually efficient and we know each other and work together. So we need to understand how the accelerators and incubators operate, what's missing from what we see in the cohort startups and the alumni startups that are getting out of the program. So in a lot of cases, if we see any deficiencies, it's good to share the feedback with the startups, the accelerators and incubators to make sure that they're really sending us investor ready startups. So it's very important for these events and meetings to make sure that all the players of the across the ecosystem, we get to know each other and discuss what's needed to take the whole startup ecosystem in Africa in a better place.
And being this bridge between that angel investment and managing a fund, what sort of challenges have you come across in the recent months, and have you overcome it? Or if it's still a challenge, what plans do you have in place to mitigate it?
Again, raising is hard, so that's and I think it will always be. I mean, regardless of the time, the size of the fund, fundraising is definitely challenging and hard. For me, again, I think the main challenge was moving from the micro retail investor that is doing like micro ticket to a larger size kind of investor. So apparently I tapped into my network. A lot of people who were investing with me in the syndicate actually were can write a big check into a fund. But I think developing the pipeline and the prospects for this kind of investors was, in the beginning, it was challenging for me. So tapping into the right network and navigating the connections and the relations that I have built It needed a lot of work. Again, it's a huge network, and I needed to tap into the right people and understand exactly, I would say, who is my investor archetype, what's the right persona across different segments, whether they're individuals or family offices or maybe institutions. So this was something probably challenging in the beginning, as I moved from this kind of investors in the syndicate and moving to raising for the VC fund.
What's your advice to someone who wants to get into the VC space or that investment space, who has a bit of capital but doesn't know about the VC landscape?
My advice always is to start step by step. So I encourage them always to start by doing angel investing, because this will force them to learn. I mean, now they put money in a specific company, they will try to learn about how to support the company, how to look at it, and so on. They will do mistakes, they will do wrong, of course, investments, but this is how they will learn. And maybe move, as I said, step by step. Try to join different programs to get the experience, maybe work as well into a VC. I think my path maybe was a little bit different, but I jumped directly, and I started Jedar Capital. But also it's good as well to maybe join a VC firm where you can learn a lot before starting your own thing, if their plan is actually to raise their own fund.
Sherif, thank you. Thank you for your time and the
Thank you,
valuable
Lisa.
information.
Thank you.
And also the impact that you're making with these investments in these African companies. So thank you for doing that.
Thank you for having
And,
me. Thank you.
I would just wish you all the best for
Thank you very
the
much.
future.